It happened in the past. Will you let it happen again and watch all of your stocks go down like the Twin Towers back in the day? With Warren Buffett and Charlie Munger preferring to hold onto their cash instead of going out to buy stocks, you surely don't want to flirt with trouble. One thing is for certain, the new troubles are going to be different from the old troubles. If you're interested in improving your life by achieving financial independence and learning more about stock market investing, make sure you press the like and subscribe button. Welcome to 5-Star Finance, the place we teach you how to achieve financial freedom. When some nations print money on a large scale, it is likely to bring some serious trouble in the long term. There's never been anything like this ever before, and history tells us that when we try to print too much money, we usually get into terrible trouble. What implications will the modern economy have for value investors? And if the trouble is certain, how can we try to stay away from its wrath? Today we bring you the word from Charlie Munger on what's coming ahead. Investing in stocks for the long term. If you're going to invest in stocks, keeping the long term in mind, of course there are going to be periods when there is a lot of agony and periods when there will be a boom. Both of these scenarios will go hand in hand in the long term. You just have to learn to live through them. As Rudyard Kipling puts it, we need to treat both of these imposters as the same. You have to deal with the daylight as well as the night, without any of them bothering you. Sometimes it's day, sometimes it's night, sometimes there's a boom, and sometimes there is a bust. Munger wants you to keep going as well as you can and keep going as long as they let you. He always believed that nothing was worth an infinite price. For example, even an admirable place like Costco can get to a certain price from where you need to say that's simply too high. But Charlie Munger also argues that if he was investing money for some sovereign wealth fund or some pension fund with a 30, 40, or even 50-year time horizon, he would always prefer to buy Costco at the current price. It's that strong of an enterprise with strong core values. The index fund bubble. Now you might be wondering what impact passive investing has had on stock valuation, right? According to Charlie Munger, that's another thing that's coming. We have a new bunch of emperors, and they are actually the people who vote the shares in the index funds. All of a sudden, we've had this enormous transfer of voting power to these passive index funds, and that can change the world. The consequences are unknown as of yet, but it can be predicted that they will not be good. How robotics will change the world. The United States has a hugely strong economy and a hugely strong technical civilization that's not going away. You can't really believe what the modern factory looks like when you fill it with robots, and that's simply increasing with time. That also means that if you have a fine unionized job and they replace you with a robot, you have a serious problem to deal with. For example, if you have a company like Kodak to compete with and they create a product that obsoletes your product, you have a problem. Money printing and history lessons. Because all of these problems are real, and all of these problems require some sort of work to be done from your side, a lot of people don't like this solution. Also, because it's simply too tempting to get rid of your debt just by giving a guy a non-interest bearing checking account instead of having to pay him an interest every month. Not only do we have a serious problem, but the solution to it, that is the easiest for the politicians and for the Federal Reserve too, for that matter, is just to print more money and solve the temporary problems that way. That, of course, is going to have some long-term dangers. We all know what happened in Germany when the Weimar Republic just kept printing more money, and eventually everything collapsed, and that was the contributor to the rise of Adolf Hitler. All of this stuff is dangerous and serious. Value investors don't want a bunch of politicians doing what's easy, rather than keeping the long-term goals in their minds. History tells us what happens with that everlasting doubling of printed money. Selling everything. The next million-dollar question that arises is that what if the taxes were not an issue? And what if we go for cash today and wait for better opportunities to deploy that cash over the course of the next 12 months? According to Charlie Munger, he has never hoarded over cash waiting for better options or favorable conditions. What he has done is always invest in the best thing he could find. Munger also puts it that the Daily Journal has used almost all of its cash. But Berkshire has a lot of cash, but the sole reason it is not spending it is because it cannot find anything worth buying. Why is Warren Buffett holding cash and not buying stocks? Now, some of you may question that given the market correction in early 2020, why isn't Berkshire buying anything? The sole reason behind this strategy by Berkshire is that they cannot find anything to buy at prices they're willing to pay. It's just that simple. Other people are bidding the price up, and the interesting fact is that a lot of people aren't buying because they want to own something. It's because of the fees-driven buying, and private equity buys things so that they can have more fees by simply having more things under management. Now, it is a lot easier to buy something when you're using somebody else's money. And to put things straight, it's not a tragedy that Berkshire has some surplus money that they're not investing. The growing inflation and all the speculation. A lot of people are worried about inflation and the future of the world. Inflation is a very serious subject, and it can be argued that it is the way democracies die. When democracy crumbled in Latin America, inflation had a big role in it. The same goes for Asia and so on. If you look at the Roman Empire, it couldn't control inflation, and eventually the whole empire collapsed. Charlie also says that the safe assumption for an investor over the next 100 years is that the currency is dropping to zero. Advice for investors. So how can investors deal with inflation and the dangers it can bring along? According to Charlie Munger, you may actually have to choose the least bad of a bunch of options. You're actually lucky if you have more than 3 good assets. You don't need to have a whole lot of diversification. Think what it costs to own a house in a desirable neighborhood like Los Angeles. All you have is yourself. It completely depends on how you choose to nourish your powers and talents. You can always increase your earning power. It's going to be very difficult for the bunch of students graduating from college right now. It is going to be a whole lot challenging for them to get rich and stay rich for a long time. If you're looking to strategize your investment journey to make the most out of the incoming trouble, you might want to refer to the 6 different stock categories that are important for every value investor to analyze. Make sure you check out the free ebook in the description below. So how do you plan to stay away from inflation and its cloud? What do you think about Munger's advice? Let us know in the comments section below. Subscribe and turn on notifications. Check out this video we handpicked for you, and we'll see you in the next one.